What's going on, everybody? Welcome back. Welcome back. Shout out to y'all. Shout out to y'all. What's up, broadcaster? What's up, Echelon? Shout out to y'all. What's going on this Sunday evening? How's everybody doing out there? What's up, Mike? What's up, Daryl? Shout out to you. Appreciate y'all joining. If y'all just joining, make sure y'all smash that like button, subscribe if you're brand new to the channel. What's up, Mark? What's up, Mister? Appreciate y'all joining. What's up, Barton? What's up, Lenny? What's up, everybody? Shout out to y'all. Today is Sunday, May the 11th, 2025. Happy Mother's Day to all the mothers. Shout out to y'all out there. But with that being said, we back to business. It's Sunday evening and we're beginning a new week in trading. So right back to business like we never left off. What's up, ZZ? What's up, Scott? What's up, Carrie? Appreciate y'all joining, man. Everybody showing up on this Sunday evening. What's up, SBG? ZZ, you said Trump reached the deal with China, looking good. ZZ is all a narrative. It's been a narrative the whole time. The tariffs has always been a narrative. I was never concerned about tariffs at all. We all know that's a distraction, but we're gonna move on with that. Let me get a quick roll call. Y'all shout out where y'all from. City, state, region, country. Shout out wherever y'all from in the world. Go ahead and shout that out for me. Give me a quick shout out. We got Pennsylvania in the building. Shout out to PA. We got Venice, Florida. Shout out to Chicago. Shout out to Texas in the building. Now give me a quick shout out. We got the Florida Keys in the building. A lot of people from Florida Keys up in here. Shout out to you, Carrie. But with that being said, all right, we got some price. We had an exciting end of the week last week. Everything pretty much was on the up and up. We got Bitcoin back over $100,000. Bitcoin about to break its all-time high. We're going to get into it. We got Baton Rouge in the building. Shout out to Baton Rouge, Louisiana. Shout out to Los Angeles. Big week this week. Shout out to you, Naquan. Yes, gonna be paying attention. A lot of distractions. If y'all just tune out from the distractions and could just focus on technical analysis, y'all should do that. Shout out to North Carolina in the building. Also, if you're interested in signing up to the Patreon before I get started, y'all come over here if y'all want to learn technical analysis, or you want to get some type of mentorship. Come over here and sign up to the Patreon if y'all want to learn how to properly do technical analysis like I'm about to show you here in a minute. But we got XRP trading at $2.36. We got XLM trading at 30 cents. We got XDC trading at 7 cents. We got HBAR trading at 20 cents. We got Bitcoin 104,000. I believe the all-time high for Bitcoin was 109. We're gonna blow through that pretty quickly. If y'all missed the live stream yesterday, I said Bitcoin. Don't be surprised this week or next week we go ahead and take out that all-time high. Ethereum back up 2,500. We got Algo at 24 cents. We got Solana $173. Shout out to Texas in the building. Appreciate y'all joining. Smash that like button, subscribe if you're brand new to the channel. So let's go ahead and come over here to the first, let's look at the economic calendar. What do we have coming up so far this week? So take a look at the economic calendar. This week right here starts the second week of May. This is the official second week of May in the market. So the 11th through the 17th, this is week 2 for May. If y'all haven't noticed, man, these days been going real slow. It's almost like time has slowed down again. Time be speeding up and slowing down. So today, this weekend was pretty long for me. I don't know about y'all, but it was pretty long for me. But let's get through this week. Next week, May 19th, we got the CME futures derivatives coming out. I will be keeping up with that. I will be trying to show y'all how to trade that, how to execute on that. So y'all stay tuned. Make sure y'all subscribe. We're going to go over those futures contracts, and I'm going to be demonstrating how y'all can be taking opportunities trading these markets. So that's what we do. So coming up this week, we got a lot of high impact news. A whole lot of high impact news. We don't have no news tomorrow. So if you don't know, I use this economic calendar as a guide. So it helps me. It's a guide into the future. So we can predetermine when smart money market makers will inject liquidity into the markets by using the roadmap, which is the economic calendar. So we can forecast when they have CPI or FOMC meetings, when federal chairman Jerome Powell would speak. We can forecast all that. And usually during these times of the day, during these certain times of the week, the market can be very volatile, very manipulated, and they can inject liquidity into the market. So if you don't know, the markets are algorithmic. They are already predetermined, pre-coded, all that. So that's what I teach over here. And then if we go ahead and forecast out into next week, let's go ahead and take a glance into next week. I'm going to go ahead and say this could be a potential big week in the market because we don't have a lot of high impact news. Nothing really too high impact. Monday, May 19th, we have the futures CME. That, if you don't know, the futures contracts will bring the liquidity to the underlying asset or the commodity. So the futures contracts allows institutions to bring their liquidity into the market, and that can potentially set the price of the underlying asset, which is the commodity, in this case, digital assets, XRP, Bitcoin, whatever we're looking at, gold. All those markets are controlled by, the overall price is controlled by the futures markets. So, or the derivatives markets. But next week, we have a lot of low impact news. And then on Thursday, we got some high impact news in there. But I'm going to anticipate this third week being very exciting. I'm going to say that. Remember I said that. I will refer back to this. So let's go ahead and look at XRP for the upcoming week. So what's y'all expectations? I want to get some engagement going. What's y'all expectations closing the month of May? Or what's your expectation? Because I'm on a 3-month time frame. What y'all thinking about this quarter, the second quarter? How do we close this second quarter? Are we setting up for an explosive third and fourth quarter? Or do y'all think, because I've been seeing online, people think that the fourth quarter will be a bear market, quote unquote. I hate that term because, again, the markets are algorithmic. There's no real bear or bull market. These things repeat over and over again. So what do y'all think for the upcoming quarter? How do y'all think we close the second quarter? Because we only have a month and 19 days left. So 1 month. So June will begin the third quarter of 2025. Echelon, you said you think we're going to close strong? I believe so too, Echelon. We're already seeing explosive price action right now. Mark, you said we think we're going higher. Barton, you say sideways and then up. So what do you mean, Barton? Do you think we consolidate sideways the rest of the second quarter? And then when do we go up? 2026 or in the third or fourth quarter? What do you think? What's up, High Five? Shout out to you. Naquan, you said depends on what narrative Trump and the Fed do. If it's a positive narrative, we go up. If it's negative, we go down. Third quarter, I don't know. Very bullish to close this month. ZZ. Lawrence, what's up? Shout out to you. Appreciate you joining. Lenny, you said it depends on the ETFs. So Lenny, the thing about the ETFs are very important, but they're not, in my honest opinion, they're not more important than the futures derivatives markets. Again, that's a bigger marketplace than, in my opinion, the ETFs. But I feel like, and then like, they're not even talking about the futures contracts and the derivatives from the futures contracts. They're keeping that kind of low key. They're going live, like the Coinbase contracts are live. And then on the 19th, the CME, they announced that. And then even Brad Garlinghouse mentioned it. he really doesn't even talk about the ETF so much. Somebody might ask him a question about ETFs and he might answer it, and then he really doesn't answer it. But when they announced that CME futures contract, he went straight to social media and he was like, congratulations, this is a proud moment for Ripple, etc. So he knows what those futures contracts means to these markets. That allows these institutions to come in and hedge on both sides of the market. So they're not going to only be thinking long term. They're going to be thinking right now in the moment, shorting, buying, selling, all that. Lenny, they will bring a lot of institutional money, but I agree with you, Lenny, most definitely. All these things will bring a lot of institutional capital. Barton, not long sideways close month, strong takeout, high liquidity. For sure. Lawrence, you say up strong. Okay. And if y'all be just joining, man, make sure y'all hit that like button. I got 16 likes, over 30 people in the building. Y'all go ahead and smash that like button. If y'all just joining, y'all new to my channel, subscribe to the channel. I appreciate it. So this is XRP on the 3-month time frame. XRP, you already know I'm about to break it down. We're gonna get into the technical. Again, if you haven't seen this before, this is brand new to you. You subscribe to the channel. If y'all want to learn this skill set, click the link in the description. That goes to the Patreon. And now I'm gonna show you how we break down the markets. We starting with a top-down analysis. We are beginning a new week in trading. I'm starting from the 3-month. I'm gonna work my way down from the 3-month, the monthly, the weekly, the daily. And then anything below the daily time frame is what? Y'all tell me in the chat. Anything below the daily time frame is what? Anything below the daily. I'm gonna let y'all answer that in the chat. So let's start on the 3-month time frame. Shout out to you, Lenny. Intraday. So anything below the daily time frame is intraday price action. So we're no longer going to look at the market from a long-term perspective. We're going to look at it from a day trading, intraday volatility perspective. So I'll get into that when I get there. So on the 3-month time frame, this is how, if you're brand new to technical analysis, you always want to start on a higher time frame. So I'm starting on the 3-month time frame. We have 1 month, 19 days left to complete this candle. What have we done so far? So we already know. And again, if y'all just joining, I highlighted this orange highlighted area. I highlighted this a month in advance. It's all documented. It's on my channel. 1 month in advance, I was telling people, hey, we can drop down here into this gap in price. This is a fair value gap. It's a inefficiency in price. It's an inefficiency in the market. Price is algorithmic. So what an algorithm wants to do is refer back down to this to make it efficient. That's exactly what happened. And I called that 1 month in advance. So we did that. So I gave you 2 scenarios. I said, hey, we drop down in here and we hang down here for several months. Again, this is a 3-month candle. So this candle potentially could have traded down here and hung out for the first 2 months. Now we got 1 month and 19 days left to complete this candle and we didn't hang out down here. So the one scenario was I wanted to see it drop down into fair value and we potentially hang out down here, but we didn't. The second scenario was we quickly drop down here. We don't stay down here long and we move away. All this is documented on my channel. Everything I'm saying is documented because algorithmic trading is only so many things it can do. It's very generic. Is certain things that repeat over and over again. Now, those 2 scenarios are one of the things that repeat over and over again. And if we drop down to intraday price action, I got many examples where I could show y'all because price is more frequent. I got more examples where I could show you that this is happening. Hold on, we're gonna get to it. So this is pretty much an in-depth technical analysis for people who are invested in XRP or concerned about XRP. This is gonna be an in-depth analysis. I'm gonna get to the other assets, but I might not. I don't know. Let's see how long I take. So let me get through this. If y'all got any questions, let me know. So we drop down to offer that discount. We're also hanging out inside of this wick over here. So if you don't know, there are hidden levels in price that most retail aren't aware of. And let me see if I got it highlighted. So this right here, this wick, this is called a ghost pool. There are specific price levels that are inside of this wick. So if you ever see large wicks above the market or below the market, you never want to ignore them because we can use those as reference points to take trades and see if it will use support or resistance. So This is a premium array, ghost pool, and then look at the specific levels that we have been we're just pretty much hanging out inside of this. We're hanging out inside of this. The midway point of the wick is crucial. The midway point is a critical price point. And we have traded up there twice. 1, 2, rejected. And now we're just still hanging out inside of this range, inside of this wick. So this is significant that I'm watching over here. I'm watching this over here. So I'm gonna hide it. Next, if you decide not to use that one, you can use this one right here as well. So if you don't want to use that one that's zoomed down in price, you can also use this one right here. Remember, you don't ignore the wicks. So what I'm gonna do is I'm gonna highlight that wick. You said 340. I'm gonna highlight that wick. And this is a higher time frame perspective. So I took a Fibonacci tool from the closing price of this candle right here, and I drew it all the way to the high of that wick. And you can see this 0.75 level. You see us trade up into that and we rejected it. We trade up to it and we rejected. Now we're just ranging inside of this wick right here. Now we got realistic levels that we can potentially reach inside of this range. So there's multiple things that I'm using. I got many tools in my arsenal. There are many tools in my arsenal. So many tools in my arsenal. So I'm referring to those levels above price. I'm aware of them, but I remove them from my chart. So next thing, okay, we drop down a discount. Remember, the market goes from a discount to a premium to a discount. So that's all the market does. It repeats. So let's go down to a monthly time frame. Remember, the quarterly candle, second quarter, we got 1 month, 19 days left. Let's drop down to the monthly. On the monthly time frame, we got 20 days left in the month of May. And like I said, May is dragging by. I already feel like it's been 3 weeks in May, but it hasn't. But we have 20 days left in the month of May. And we really just started the second week of May. So we're starting the second week of May. So, hey, we got a long way out in these next 20 days. So far, earlier in the month or last week, I believe, I asked y'all, what do y'all see the month of May doing? I asked y'all. A lot of y'all said, hey, we come back down and take out the previous month's low, or we come up and take out the previous month's high. I was siding on the buy side. I wanted to see price come up, take out previous month's high. Why? Why did I decide that? Because we already dropped down to a discount. We traded down into a discount. So the market goes from a discount. After it leaves the discount, now it's seeking premium objectives. Premium objectives. So we already took out the liquidity. If you don't know, above old highs and old lows on candlestick charts, that's where the pending orders are in the market. You don't have to believe me. It is what it is. Also on the monthly time frame, I'm looking at this large wick. So again, we can refer to that as well. That's a premium level. So I'm gonna take the Fibonacci from the opening price up to the high. And you can see the ranges inside of that wick. See how this candle right here last month, we traded up into that 0.75 level, and then we closed, and then we opened up right here. We traded higher, punched through that 0.75 level. So I'm going to anticipate and forecast that we get up to the midway point of that wick right there. And then depending on how much institutional sponsorship comes to the market, I already see there's nothing really holding price back to go on ahead and come up and take out the previous all-time high. I'm gonna go ahead and say that. It's looking very strong to come up and take out previous all-time high. So keep that in mind. So from the monthly, we know we got 20 days left. I'm gonna go down to the weekly. So inside of every monthly candle, so let me go back up to the monthly, and y'all take this down on your notes if you don't know. Every monthly candle, how many days are in the month? I mean, how many weeks are in the month? Y'all tell me in the chat. That's obvious clearly, but I'm trying to give y'all perspective. How many weeks are in a month typically? Some months are different, but how many weeks are in a month? Yes, Lenny, 4 to 5. So there's some months where we have 5 extended weeks, especially in the markets. And then there's some months where we have 4 weeks in the market. But generally, 4 weeks are in 1 month. So with that being said, how long can a monthly candle take to print? Meaning, how long does it take from this candle to open go low, create a high, and then close. So every candlestick has a open, high, low, close price. Those are all significant price points. The open, high, low, close. So generally on this monthly candle, there are pay attention. There are 4 weekly candles embedded inside of this monthly candlestick. Now I'm trying to tell y'all that price is fractal. Price is fractal. So there are 4 weekly candles inside of each one of these monthly candles. Hopefully y'all caught that. So from the monthly, let's go down to the weekly. We already completed the first week of May. So right here, this candle right here, just look at my cursor, this down close candle, this black candle. This candle right here was the last week of April. And these are weekly candles. This was the last week of April. This candle right here, which was last week, that was the first week of May. And then boom, we just began the second week of May. And we have, if you look over here to the right, where my cursor is, we have 7 days to complete this candle. So how many days are in the week? That's obvious, clearly. But how many days in the week are there every week? It's obvious. We don't skip any days of the week. But there are 7 days every week, Sunday to Sunday. So there are 7 daily candles inside of each one of these weekly candles. Hopefully I'm pulling back the mat. Hopefully I'm revealing the matrix to y'all. Hopefully y'all are paying attention. There are 7 weekly candles. Excuse me. There are 7 daily candles inside of each of these weekly candles. So we can anticipate 7 daily candles to print before this weekly candle closes. Hopefully y'all paying attention. Again, I'm not normally talking about this, but I most likely want to say this for my Patreon. Y'all sign up for it if y'all want to learn. But if y'all are here, y'all getting it. Y'all help me get the likes up. I got 30 people in the building, only 19 likes. Y'all smash that like button. If you're brand new to the channel, subscribe to the channel. We over here giving an in-depth analysis for price. So with that being said, on the weekly on the weekly chart, I'm gonna go ahead and get what's our bias? Y'all tell me in the chat, what is bias? I want to see y'all definition of bias in the chat. What is your directional bias for the week? Y'all tell me in the chat. What is bias? Do y'all know what bias is? Y'all let me know in the chat. Y'all get some engagement going. What do y'all consider bias? And then I'm gonna tell y'all right here what the bias is. Very simple. It don't have to be a long drawn out answer, but what do y'all consider bias? Barton K, you said you're neutral. What does that mean? Neutral what? Mark, you said up. SBG, you said bias is indication. Lawrence, direction. Barton, I have an opinion either way. Okay, Barton, you have an opinion either way, but check this out. If you had a gun to your head, now I'm not being serious. I'm just, don't take this literal. But if you had a gun to your head and you had to pick a direction, which direction are you going? That's how I view it. Gun to head, which direction do you see? Because it's going to do one or two things. Sometimes it's neutral, and I've explained that before, but gun to head, which direction do y'all see price going? Top side liquidity up, heaven, hopefully. Okay, Barton. Okay, I got you. High. So, okay, let me explain. Bias is in trading, in the markets, you're going to have a bias. You always want to have a higher time frame bias. That's key. Take that down. You always want to have a higher time frame bias. You want to have a direction. It's pretty much a direction. Which side of the market do y'all see price going for? And I teach this in the Patreon. Y'all sign up in the link. Y'all sign up if y'all want to learn this. But the bias is simple. You either start on the monthly. So for example, I already told y'all my monthly bias. At minimum, when this candle open, again, this is a monthly time frame. When this candle open May 1st and I went live, I said, hey, at minimum, where do y'all see price going? My bias was this old all-time high right here, this previous all-time high. Not all-time high, that previous monthly high. I wanted to see price go up there and take out that high right there. A lot of y'all told me y'all wanted to see it come back down, but guess what? It didn't do that. And we traded up and took out last month's high. And y'all might not think that's a lot of price action, but guess what? This candle right here opened up at 207. Now, what was y'all portfolios looking like at 207? And then it went up all the way up to 248, and it's currently trading at 239. So again, that's a lot of, if you got a portfolio like I do, that's pretty significant from going from 207 to 249, depending on who you are. Also, it went over, it created a low of, it created a low of 207. It opened up at 219. So again, that's a lot of volatility pushing price. And remember, retail can't push price. So that's pretty much bias. We wanted to pick a side. I picked the previous month's high. And then remember, that was my bias. So, okay, you never lose track of your bias. So if I draw up this Fibonacci again, bring that up, and I'm looking at this wick. Okay, so far we took out last month's high, which that's where pending orders are. And then, okay, what's another direction we can reach for next? What would be my next bias? Well, if we're looking at the Fibonacci and those ghost pools, those levels, boom, right there. See that 0.5 level, which would be the midway point of that wick right there, the midway point. So that will be my next directional bias. Again, I'm not sitting here giving y'all outrageous price levels. No, we're going to take it to price is algorithmic. It's looking for reference points. Algorithms are going to want to refer to things in price that are left behind in price, that are coded. So that's what I'm trying to teach y'all. Price is coded, it's algorithmic, and it's going to want to reach for things repetitive. It's going to want to repeat certain functions. So this is one of those functions that I'm showing you. We took out last month's high. And if you don't follow charts, that was very exciting to close April at, let's say, what April closed at 219. We opened up at May 219, and then it went up to 248. That was very exciting for people who don't watch technical analysis. But when you look behind the engine, you don't understand. You might not be seeing what's going on behind the engine because you don't know what you're looking at. So, okay, everybody's saying expanding higher. And then remember, we got this high right here, which is the all-time high. So we got previous month's high. So eventually, I want to see, it might not happen all in May. It can, because we're just in the second week of May. So we got 20 days left to complete this candle. We can expand higher, and I want to target eventually March's high. So we got March right here. Now, when I drop down to intraday, this is going to look way cleaner, because watch this. I'm going to remove this. And all these levels are already on my chart predetermined. I never removed them. I've been having these levels in my chart since January. So nothing has changed. So look at all these levels that I have highlighted in my chart. See that? All that liquidity above the market that the market makers and institutions have left behind in price. All these highs. All these highs. So for example, and remember, I'm just zoomed out still. I'm still zoomed out. Look at this wick right here. Remember, don't ignore wicks. Now, this wick right here, I would ignore it except the high. But when you see a wick like this, I'm going to note that. But inside of this wick on lower time frames, there's an old weekly high. This trend line right here, it says PWBSL. That stands for previous week's buy side liquidity. So y'all tell me in the chat, what is this level right here? This previous week's liquidity pool, what is that level inside of this wick right here? What level is this wick? Where is that resting at randomly? Or is it random? Is it coded? Is it algorithmic? What ghost pool level is that right there in the chart? Shout out to you, Lenny. Lenny is in the Patreon. So Lenny he has an advantage over y'all. He understands. So watch this. Watch when I draw the Fibonacci. From this candle right here, the closing price up to the high. Boom, just like that. Now, It could be slightly off, but look how close that liquidity. Remember, the liquidity, price is always seeking liquidity at all times. It's looking to seek liquidity because it's algorithmic and it's coded to do so. But do you think it's random once I lay that Fibonacci out? Look how, if price is going to come back up to that 0.5 level of that wick, well, what reason would it come back up there for? What reason would it come back up there and take out or reach that 0.5 level? Well, the reason would be because there's old liquidity resting in the charts at that level. And then, okay, look at the 0.25 level. We can get up there, but just above it is another liquidity pool from weeks ago, way back in January. And then eventually the top of the wick, which if I remove it, the Fibonacci is the all-time high level. Y'all see that? So it's not random, it's algorithmic. So, and again, look at this. Inside of this candle right here, there's an old weekly high. So if I draw the Fibonacci from the close of this candle up to the high, right there. So you have reasons. Again, I just showed you this, drawing that wick, that Fibonacci. Now you got more confluence. All confluence means is you have multiple things that align with each other. So you got multiple concepts that I talk about that align together, giving you valid reason why price should go to these specific levels. You understand that? You got multiple things that are confluencing together. And what reason could we get up to this 0.5 level, which is $1.56? What reason could we get up there? Because we have liquidity on lower time frames from previous weeks that are resting right above it. And then the old high, which will be the top of the wick, there's liquidity resting at that level. And that price level is $2.99. So again, all those levels are still in my chart. So hopefully I give y'all more insight. If you didn't understand it, go back and watch the live stream. If y'all just joined, make sure y'all smash that like button for me. Subscribe to the channel. Share the video and sign up to the Patreon. All right. Let's go back down to the weekly. So we got that understood. We're going to get to it, Lenny. Just by me at glance and already out the gate, I'm already seeing what I wanted to see. I'm already seeing what I wanted to see to open up the week. So back on the weekly. So I give y'all the monthly bias. I'm gonna ask y'all in the chat. Y'all engage. I want everybody in here. I got all 35 people in here. Even y'all that are in the bushes that don't come out and speak. That's very rude when you're in somebody's house and you don't speak. But I want y'all in the bushes to come out and give me y'all directional bias. Give me y'all directional bias. What side of the market do you see this week, which we got 7 days left? What side of the market do you see us reaching for? So I give you two options. We're going to take out previous week's high right here, or we come back down and take out the previous week's low. What's the obvious? It's clear and obvious on what it wants to reach for. Clear. It's clear and obvious what price wants to reach for. Okay, Daryl, we got previous week's high. Mark, high. Lenny, high. Barton, high. Previous high. So we almost got a unanimous vote talking about previous week's high. Taking out previous week's high. Shout out to you, High Five. 2.65 expanding. You got to be different, Law Docs, but that's okay. I like you. You got to be different. Mudvayne, high. Trumpet Swan, high. So it's damn near unanimous that we want to come up and take out the previous week's high. We want to come up, take out the previous week's high. So, with that being said, that's our directional. It's obvious. How much more do you don't need no indicators. You don't need nothing fancy. You just need pure price action and somebody who's going to explain it to you and break it down for you. You need a mentor and somebody who has experience in doing this. Not too many people out here know what they're doing when it comes to these markets. So it's clear as day and it's very generic that every week. So let's look at last week. What did last week do? It opened. It took out last week's low. So the first thing it did, it went down, took out last week's low. For people like Lenny in the Patreon, in the Discord, how did I know that we was going to come down on either Monday, Tuesday, or Wednesday, create the low of the week? So again, I'm gonna show you intraday. So either Monday, Tuesday, or Wednesday creates the low or the high of the week if we're bearish or bullish. So we traded down, took out last week's low, traded down, took out last week's low right here. And I told y'all ahead of time, like on a Sunday or Monday, I forgot, either Monday, Tuesday, or Wednesday, the low of the week will form. It formed on a Tuesday. So it dropped down, took out last week's low, and then it displaced higher. Displacement means rapid movement in the opposite direction, though. So that's displacement, where it quickly moves with speed in another direction. So we took out last week's low. There's orders, pending orders below this old low that market makers leave behind in price. They scoop up the buy orders, and then they draw price higher to take out what? Previous week's high. Now, this generic function happens every week. Now, there's some weeks where we consolidate, and I already told y'all what the protocol is when we get weeks like that. So this happens every week. So let's look at this week right here, which was a down close week. So on this week right here, bearish candles open at the high, bullish candles open at the low. So this candle right here, it opened up right here and we traded higher. What did we do? We took out the previous week's high and then we traded down inside of a range and then we closed. Okay. So let's just I'm just going to keep showing you examples. Let's look at this week right here. This candle right here, it opened, it traded lower, and then it didn't take out the low of the previous week. It traded higher and took out this weekly high right here. And then it also traded up and took out this weekly high right there. So this week right here did a lot of damage. Took out those previous week's highs and then it closed. So this function happens every week. And if y'all are brand new or don't know nothing about trading, all you have to do is apply this information because it repeats over and over again. What's up, Carlos? Appreciate you joining. Law Docs. Watching face grabbers for the last 5 years, you are refreshing change. Yes, because I come from a different community. I didn't come from the crypto community. I come from a trader's community. So that's a whole different world outside of this crypto stuff. Even though I'm crypto, I understand crypto, but I'm a trader first. So we deal with the mechanics of price. So, or price action. We deal with the mechanics of reading charts. And it's deeper. It's almost like getting a degree in college, learning how I learn. So, and I want to give y'all one more example. This week right here. So this week right here, this is an inside range week. So this week right here, where it didn't take out the previous week's high or low. It just pretty much consolidated. This is the rare occasion, and it happens more than you think. But some weeks we get a week where we don't take out the previous week's high or low. So y'all tell me in the chat, what's the protocol if we get a candle like this that is stuck inside of a range? What's the protocol? And I'm gonna let y'all read it in the chat. What's the protocol when we don't get a week where we take out the previous week's high or low? What's the protocol? Shout out to you, Lenny. So anytime we get a week where we don't take out the previous week's high or low, we can anticipate that the following week, which is this candle right here, we get some type of impulsive. Impulsive is a better word for it, but we get some type of impulsive price action. Real explosive, kind of impulsive. And that's what happened because price eventually has to go somewhere. They can't hold it inside ranges because it's not designed to. Price, which is coded, algorithmic, it's designed to always seek liquidity. Remember, each one of these candles, there's liquidity embedded on all these wicks. Above all these highs and below all these lows, there are liquidity pools that are embedded. So it's not designed to just be held for too long. Eventually, we break out, take out the previous week's high from the previous 2 weeks, and then that function continues. So I'm gonna save the rest for the Patreon. Y'all sign up in the y'all click the link in the description if y'all want to learn more about that. So so our bias is bullish. We had a unanimous vote with bullishness. So again, for y'all people that think price is gonna go to let's say $50 overnight, $100 overnight, $1,000. How many people in the chat believe that? Y'all tell me in the chat. Do y'all honestly think price can go from, let's say right now, 239 to $10 overnight, to $239 to $100 overnight. So we got that overnight community when that has never been seen before in price. I'm not saying where it can and can't go. Don't get it confused. Don't get me confused with what I'm saying. Listen to me clearly. I'm not saying XRP can't go to 1,000, 4,000, 10,000, 100,000, $1 million. I'm not saying that. Look at Bitcoin. What I'm saying is the overnight theory. Some people really think they're going to wake up tomorrow or a few weeks from now and price is going to be just sitting at $150, $589, and we're currently trading at $239. Shout out to you, Mark. You got the best answer that I was looking for. Mark, you said it takes a while to work its way up over time. Yes. So again, if I'm showing y'all candlesticks and like this is a weekly time frame, every one of these candles in the crypto market takes 7 trading days. Well, that's a long, it's not just going to complete a whole like from 239 all the way, let's say to $10 in 1 week. No. If that happens, then y'all better get ready for something that ain't never been seen before. Y'all might as well get ready. It can take several months, several weeks. That's why I started y'all off on the 3-month time frame. Let's zoom back out to the 3-month. If we go back out to the 3-month, this is a quarterly candle. Each one of these candles take 3 months to complete. Each one of these candles takes 6 months to complete. So not 6 months, 3 months. And then if we look how long they held it in consolidation, shout out to y'all who was in this years ago and sat through this right here, this profile right there. Y'all see that I got highlighted in pink? Every one of these candles took 3 months to complete. And this was a brutal time. This was like, damn, you know, what am I getting myself into? If y'all was in here during this time, hey, now check it out. Now I'm starting to see people, you know, that are just like, again, back then the algorithm on YouTube was different. But back then, you know, we were speculating about today's price action. Now, today's price action, Lenny, you said painful. Daryl, you said excruciating. Law Docs, you said, yep, I sat through it. Law Docs, flipping the switch. I'm gonna get back to what I'm talking about with this consolidation. The flip of the switch theory or narrative. I know Brad Garlinghouse came out and said the flip of the switch. A lot of people associated that with price action, but I just, you know, I think that's more so of the technology aspect and Ripple working with banks and things going live and utility starts to kick in. Now, price is going to do what is, that doesn't necessarily correlate with price. Price is going to, like right now, price is already moving higher. If y'all don't know, I'm already forecasting us to go ahead and take out that all-time high. But the flip of the switch, most people associate that with price, and they're not looking at like just utility and the technology part. But I get what y'all saying. What's up, Arthur? You say you've been here since 2017, so yeah, most definitely. You definitely sat through some. You sat through a long time. 2017 is like super OG. Shout out to you. I knew about it, but I didn't. You know, I was too early on in my. I was in my 20s, so. Arthur, you said the reason I don't often engage is because I can't, when I'm listening to you on my TV, I went and got my computer to tell you that. Oh, for sure. I already know, like those TVs, those Roku TVs and all that, they need to make it to, they need to make it to where y'all can chat from your television. I know they haven't had that function yet, and it's 2025, so y'all might have some TVs that might do that, but a lot of TVs that got YouTube, the user interface on televisions with YouTube isn't the best sometimes, so they need to go ahead and update that. Lenny, you say you didn't get stopped out early on the trade. Okay. Let me continue. So for y'all that sat through this consolidation right here, every one of these candlesticks took 3 months. This was a long time. 3 months. So That's consecutive years. Again, this stretches from 2017 all the way to 2024, the end of 2024. Y'all sat through that. And that's what I mean by like, no, it's not going to happen overnight. And we can get consecutive bullish candles for several months, and that's still not going to be considered overnight. You know what I'm saying? That's not going to be overnight. It's going to be a gradual. It's like going up a hill. Like, it's going to take gradual steps, and it's going to be on its way. Like, it's getting started going up the hill, and it's just going to roll, but nothing like over the night. Nothing over the night like that. So let me go back down to the weekly. Barton, you said 2 years in. Shout out to you. So we already got our bias. We got our bias. So when we get a weekly bias, once we drop down below the daily, if you're day trading, Lenny, if you're somebody who likes to day trade and consider day trading, you want to stick. Now, this is key. Listen to this for people, and it's simple. We came to the conclusion of the weekly bias. That was very easy. It wasn't hard. You didn't have to break a sweat. We just said, hey, we want to see price come up, and a realistic target would be previous week's high. This isn't guessing. We're using old reference points and charts. We're using old reference points and charts, so it's not guessing at all. It's realistic, and it applies. It's real. It repeats over and over again. Boss, you have you seen the pattern with how many weeks out of the month it doesn't take out previous week's high or low? Asking this for weekly swing trade purposes. I know it's random, so let me reread this. Have you seen a pattern with how many weeks out of the month it doesn't take out previous week's high or low? I think what you're asking me is, have I seen a pattern where it doesn't take out? So, for example, look at this week right here. I haven't seen a pattern, this candle right here, that didn't take out the previous week's high or low. I haven't seen where it consecutively does that. Normally, because it's algorithmic, whenever we get a week like this, the following week, we can anticipate it breaking out and taking out previous week's highs and lows. So they don't really hold it inside of this pattern too many weeks. So for example, if this candle didn't take out this weekly high or low neither. Now, if we ever get that, you better believe the upcoming weekly candle is going to pop. So I guess that's what you're asking. I might be wrong. I'm not sure. So back to what I was saying. Lenny, and for the people that like to trade, if we have a directional bias, that we can determine on a higher time frame, everything that we look for intraday should be in the direction of the weekly or the monthly bias. You understand that? Press 1 if you understand that. Or do I need to say it slow again? Do I need to say it slowly for y'all can understand, or do y'all understand that? Whenever we have a higher time frame bias, anything intraday, you only want to look for opportunities to trade in the direction of the higher time frame bias. So that means if you're looking to day trade, only look for buys. So for this particular week, if you're looking to day trade, only look for buy opportunities. Don't look to short the market. Now, somebody like me, I have experience. I can go inside of a week where it is a bullish week. I'm forecasting it to be bullish, and I can still find opportunity to look for short scalps on retracements, etc. That comes with experience, but you don't have to waste your time. You don't have to lose your money. Just stick to the higher time frame order flow. Stick to the higher time frame weekly bias, and it will pan out. So not only, for example, if we come up and take out last week's high, look how close this old weekly high right here is. This high was from back in March. That high right there, and I'm gonna show you how close that is to last week's high. So right there, that high is relatively equal to that high right there. You see that? So this week, I'm forecasting us to come up, take out that high and this high right here. If we come up and take out that high, the likelihood of us taking out this high right here is what? High probability. Now, let me give you some more confluence. Where is this week old weekly high right here? This old weekly high. Arthur, you said does the indecisive candle close that leads to extreme move apply to all time frames? That's a good question. I don't apply that to all time frames. I apply that to like the higher time frames. You might see it on lower time frames, but I'm always sticking to a higher time frame narrative. That's a great question. You can see it occurring, but it doesn't matter on those lower time frames. You want to see, okay, what is the higher time frame charts are doing? What is the daily, the weekly, the monthly? What are those time frames doing? That will help you, give you further indication on what those lower time frames are doing. So that's a great question as well. You can see those indecisive candles, but I don't care about them. That's just noise. Anytime I see indecisive candles on lower time frames, I just consider that noise, and that's them holding price. So keep that in mind. But back to this right here. Y'all in the chat, this old weekly high, where is this in relation to this right here? Over to the left. Where is this old weekly high, which is buy side liquidity? Where is that in relation to this ghost pool right here, which is a premium array? I'm waiting for y'all in the chat. I'm waiting for y'all in the chat. So I'm going to draw it up. I'm going to bring it out. This is a ghost pool. So do you think it's random? So remember, we don't ignore wicks. And do you think it's random that this old weekly high is resting right below that 0.5 level? So that's further confluence that price is going to want to reach up inside of this range right here. That is further confluence that price is going to want to reach up inside of this range right here, and at minimum take out this weekly high and come up and touch the 0.5 level. So that's roughly the midway point of that wick. That's roughly 251. So again, further confluence that price this week is going to want to come up. And then look, last week's high, where is that in relation to the ghost pool? Where's this high right here in relation to this wick over here? The ghost pool's inside of that wick. Well, it's in relation to that 0.75 level right there. And if we reach up to that 0.75 level, price is going to want to reach up and take out the liquidity pool. And if it punches through that liquidity pool, it's going to want to reach up and take out this old weekly high right there and come up potentially into that 0.5 level. And then once we get there, I will wait for more information. Once we get there, I will wait for more information. Notice I'm not saying, oh, we're going to break out from there. No, I want to get there, wait to see how price is trading intraday. Lenny, the trade I had going got stopped out, even though I knew on the higher time frame it was bullish. If I would have stayed in that trade, it ended up taking the liquidity on the hourly. Lenny, over time, you still brand new, Lenny. Over time, again, if you brand new to trading, you got to get those repetitions in. Like I said, I didn't trade real money. I practiced for 2 years straight before I fully got the understanding of, okay, I got this. So it's definitely going to take time. ZZ, so even though we have a lot of liquidity below the market, it continues to move away from it. ZZ, I know you be confused a lot, and I'm not coming at you, ZZ. I'm trying to help you understand better. Why is it moving away from the liquidity below the market? Yes, it can come back down and take out this liquidity after we reach for premium arrays. Remember, markets like to go from a premium to a discount to premium, but we already moved away from this higher time frame discount. This was a discount. So we dropped down there. We didn't drop and give multiple opportunities. See, you see this old low? I haven't removed that from my chart. There's still liquidity below the market. I have not removed that from my chart. So it's still there. Even these old lows below the market. But I am in sync. Lenny, baby step. I mean, not Lenny, ZZ. Baby steps. So what helps you with directional bias is what I'm showing you right here. week by week, ZZ, week by week. So I'm sitting here talking, taking you on the weekly. We just began a new week. I already asked y'all, what side of the market do you see price reaching for at minimum? So with the higher time frame bias, that should help you understand you're bullish. But you have to understand that higher time frame narrative. Again, market is consolidating on the weekly time frame. But if we drop out to the monthly, we drop down inside of discounts. We also got a monthly fair value gap right here. So let me bring that up. Right there. Also, you see those highlighted areas? All these things are in my charts. I don't remove this stuff. They're still in my chart. So this blue highlighted area, this is a monthly fair value gap. How many times have we dropped down there? 1, 2, 3, 4 with precision. Well, we slightly didn't. We came down there. Look how close this was from giving another opportunity at discount. It dropped down there and boom, displays higher. Well, let me look right quick. It used this wick right here, this large wick. It dropped down into it, touched it, displays higher. So let me show you how sensitive that is. If I take a Fibonacci from this candle, the opening price down to the low, do you think it's random, ZZ? Again, this is understanding the higher time frame narrative. Do you think it's random that this candle, which is the month of May, we opened up right here, we dropped down to we dropped the May to low of 207. The opening price of this candle right here is 208. Is it random that we dropped down into that? We barely missed this fair value gap, but the sensitive area was this support level right here. And then boom, it displaces higher out the gate. So hopefully you're understanding the higher time frame narrative. Trend, what's up, Trend? You said we should be moving up to get past our old weekly high. I wouldn't be surprised if we start staying in the $3 range if things play out. If not, we'll retrace. Shout out to you. The question is, if the higher time frame is bullish, intraday would you take more risk? What you mean take more risk, Lenny? What do you mean by taking more risk? I'm gonna show you when I go down intraday. ZZ, I'll keep that in mind, that judging direction is a day by day thing. That's what I be trying to tell y'all. Even a week by week, even a month by month. That's why I haven't even dropped down intraday yet. I'm still on the higher time frames. All this analysis that I'm giving y'all is still on the higher time frames. We haven't even worked our way down to the lower time frames. So with that being said, let's get to it. If y'all just joining, make sure y'all hit that like button for me, subscribe to the channel. If y'all want to learn this skill, this level of skill, we just touched 240. If y'all want to learn this, click the link in the description below. Sign up to the Patreon. From the weekly. All right, we got our weekly bias. I just had to give y'all those extra scenarios. That is Patreon level TA. Again, because I feel like it today. I feel like just dropping dimes today, helping y'all further understand what price action is doing. And if you're in the Patreon, this is extra. You know, this is extra for y'all. I'm really doing it for y'all. So I'm gonna remove that. Our directional bias is bullish. So maybe I need to text that out for y'all. Weekly bias bullish. And hopefully y'all understand that right there. Weekly bias bullish. And you can write that down right there. Weekly bias bullish. So now let's go down to the daily. I'm not worried about BTC dominance because I don't believe in BTC dominance. Again, that's retail logic, BTC dominance and all that. That's retail logic. It's institutional dominance. Whatever the institutions want to put their money into, that's how they move price. Institutions are in control of price. So on the daily time frame, I'm looking at the past 20 trading days. So I'm taking a ruler. Y'all know about this in the Patreon. I'm looking at the past 20 trading days. Appreciate it, Mark. If you, Lenny, if you look at today's price action from this afternoon, I knew it was going to take out the previous hour's high, but had to. Lenny, You're trading. We're going to get there, Lenny. We're going to get there. But we're not there yet because you're looking at intraday volatility. You're looking at day trading perspective. Again, I'm on the daily. The daily time frame is more short term. Short term trading is, that's how I was able to call the weekly low last week. Short term trading. For example, Monday, Sunday right here. Yes. So for example, I told y'all earlier in the week, last week in the Patreon and Discord, this low right here formed on Tuesday. How do you think I knew that on Monday, Tuesday, or Wednesday we will create the low of the week? So this low right here was last week's low right there. Sell side liquidity. Below that low right there is sell side liquidity. What did we do? We opened up, we dropped down, took out sell side liquidity. The low of the week formed on a Tuesday. This swing low right here. Y'all should know this pattern from the Patreon and the Discord. There goes that swing low pattern where we got a candle to the left, candle to the right, swing low, boom, displacement higher, taking out the previous week's high at minimum. And then we just closed the week on Saturday, and now we have began a new week of trading. So you see that? All right, I'm gonna remove that. It's out the way. And this low right here was last week's low. But before that, I'm looking at the previous 20 trading days. What have we done? So in the past 20 trading days, we have been consolidating and then expansion higher. So let me show you what that perspective looks like. Take a ruler, go back to the past 20 trading days. Right there. So that's what the last 20 trading days looks like. Again, and this is for y'all who think overnight price action, you know, XRP going from $2 to $500. No, it's not going to work like that. Look at this. Look at these candles in the past 20 trading days. This is 20 trading days. So in the past 20 trading days, we traded down into this, what? Buy side imbalance, sell side inefficiency. Y'all see that? Buy side imbalance. It's a daily fair value gap. Traded down into that. Displacement lower. Also, we took out liquidity. And now, Saturday created the high of the week. Saturday, we created the high of the week. And we retraced down to what? Y'all tell me in the chat. On Saturday, which we just closed Saturday. Well, yesterday was Saturday. We traded down into what? What is this right here? Y'all might not be referring to this. But what did we trade down into? Waiting for y'all in the chat. There you go. BISI. BISI stands for buy side imbalance, sell side inefficiency. If y'all just joined, make sure y'all subscribe for me. Hit that like button. We traded down inside of a BISI. You see, look how precise. It's a small one. You might have missed that. So if I would have zoomed out, you probably wouldn't even have seen that. So do you think on Saturday, which we just ended Saturday yesterday, on Saturday, do you think we traded down there and completely fill that gap? Look at this. Look at it. I mean, how much precision did you need? Again, we snipers out here. You know what I'm saying? How much precision do you need? We traded down inside of this, what? Fair value gap, daily fair value gap. These things are generic. They repeat over and over again. And it's just repetitive. We trade down, fill in the entire gap completely and move away. Quickly move away. So remember on that 3-month time frame, I told y'all that's what I wanted to see on that 3-month. So let me show y'all right quick. Let's go back out to the 3-month. Just like that. That's the 3-month time frame right here. We zoomed out. 3-month time frame. We opened up. The only difference is this right here takes 3 months. Traded down here, and now we're still in the direction of going higher. So back on the daily, same thing. Trade down here. Only difference is on the daily, these candles take 24 hours. We already know there's 24 hours in a trading day. We drop down into this gap, offer some type of, because why did it randomly trade down here? Because this section in price action, this gap, it was inefficient. See, if I remove this, there's a clear where the wicks, what makes it inefficiency? The wicks don't overlap the candle. So they don't completely overlap the candle on both sides of this candle right here. This wick low, it trades down and it goes higher. It doesn't completely fill the candle. This candle right here, this wick high, it trades up It doesn't fill the candle. So what it did was it left a section in price right here, which is a inefficiency, which is a fair value gap, and coded algorithms want to refer back down to these levels. That's exactly what it did. And then boom, used it as a discount. And now we're displacing higher, and price is currently up at 240. So just like I showed y'all on the monthly, in the weekly. Also, I'm not going to ignore this right here as well. I'm going to show y'all this right quick. I'm not going to ignore this larger one right here. So I'm just going to drag this over right here. I'm not going to ignore this larger fair value gap right here. We're going to keep that in mind because they might want to refer back down to that, but we're bullish. I'm hoping that they leave this open. Remember, I'm sticking to that weekly narrative where I want to see price come up and take out last week's high and this old weekly high right here. And then this high right here. I want to see all that damage. Do we get it all this week? Probably, possibly, or probably not. We have to see how we want to trade this week. But at minimum, I want to come up and take out that high right there. And then I want to see us come up and take out that high. So keep that in mind. I don't want to come back down here and retest this. I don't want to come back down here and retest that. Keep that in mind. But you can't ignore it. You have to note it. Always pay attention to that. So I'm going to ask y'all in the chat, just like we did on the monthly, weekly, on the daily time frame, which side of the market do you see the daily candle? It's already Monday in Asia. So we're still Sunday in the United States. But in Asia, it is still Monday. Which side of the market do you see Monday's trading? Do we come up, take out the previous day's high, or do we come down and take out the previous day's low and come back down and retest these fair value gaps? What do y'all say in the chat? Let me get the engagement. Come out the bushes. Y'all give me a second. All right. All right, Daryl, you said previous day's low. Arthur, that's a gap. Okay. Lenny, inside. So in Lenny, you're saying an inside range day. Daryl, you said previous low. So y'all both told me on the weekly time frame, y'all see us coming up and taking out the previous week's high, right? So yes, we can have an inside range day of the previous day from Saturday. So y'all can see that. But if we're sticking to that higher time frame bias, we eventually going to want to see the next 7 trading days come up and attack previous week's highs, which is above the market right here. So y'all are saying previous day's low, inside range, and we're going to see. We're going to see. How do we see? How do we find out further information? Well, we need to go down intraday. So for y'all been waiting, we're going to drop down from the daily. Anything below the daily time frame is intraday price action. So now we're intraday. We're no longer looking at the market from a long-term perspective. Y'all keep that in mind. We're keeping that higher time frame bias, but now we're looking at fractal price action. Hopefully y'all understand that. Now we're looking at fractal price action. So here we are. I got these vertical trend lines. This helps and assists me with analyzing the market intraday. It helps me quickly refer to price levels that I'm looking for, old highs, liquidity pools, etc. So everything to the left of this vertical trend line, is last week's price action. Y'all see that? And then everything to the right is the upcoming current week of price action. So we got all this empty space over here to the right. That's what candlesticks do. They print to the right, either going lower or higher or sideways. That's all it does. We're either going to go lower, higher, or sideways. But we got all this empty space, and these are pretty much the individual days of the week for the upcoming week. And this shit repeats over and over again every week. So y'all tell me in the chat, what's the first thing I'm looking for when I'm on the hourly time frame? If you're brand new, y'all pay attention. I'm not expecting y'all who are brand new or never heard these concepts before. You got to pay attention. Arthur, let's read this chat comment. Really is that we are headed. reality is that we are headed up. Then probably some stupid crash to fill one of both of those gaps and then launch. Either that or those gaps are being left behind to draw shorts. Lunch in 30 minutes in Japan. Previous high and low. High and low. High and low. So y'all are correct. First thing I do on this hourly time frame, I want to identify the previous week's high and the previous week's low. Let me see if I already got that outline. All right, I'm gonna draw it out freehand. And I prefer to do this every Sunday. I like to do this every Sunday. Or Saturday if I got time. Sunday or Saturday. And then once I go into the upcoming week, we already got it set up. You save it to your chart on TradingView and you don't have to worry about nothing else. So this low right here is last week's low. That's where sell side liquidity is. And then this high right here, that's last week's high. That's where buy side liquidity is. Now, there goes my target right there. We're not far from last week's high. And then if we just zoom out and we just go to the left, 1, 2, 3, 4, 5, 6, 7 weeks ago. And again, all this is in my chart. I keep this in my chart. All of this is in my chart. I save it until we refer back to it at a later date. But 7 weeks ago, look at this week right here. This was the week of March. So this was on March the 24th, 2025. We're in May. And look how much data and reference points I still have in my chart. So this old weekly high, 7 weeks ago, still in my chart. In this particular week, we sold off very violently. So what happened in March where we sold off with the news or whatever? We sold off very violently during this week right here. So, and then to the left of that week, we got 8 weeks ago where this was in the week of March the 19th. March the 19th, which was a Wednesday, this old high. So that's buy side liquidity. So that's, if I just zoom out, let's go out to a 4 hour. So the 4 hour time frame is a good buffer. It's a good neutral time frame between the higher time frame daily and the intraday weekly. It gives you a good perspective. So if I just zoom out, this is how much perspective I have when I drop down below the daily. I'm aware of the higher time frame targets. This is what I'm viewing when I'm looking at the chart. Now, if I just remove these dividers, clean it up, that's what I'm looking at. That's what I'm looking at. So we know, remember, this orange highlighted area below the chart, that's that 3-month fair value gap. That's that 3-month fair value gap. And then above the market, we got those liquidity pools, and there goes my targets right there. And then if we continue to zoom out, we got old highs that I have left behind in the charts above price. We got this old high from March the 2nd, 2025, early in March. So we just ended, we had just ended February, and we had an old weekly high right there left behind in price. And if we continue to zoom out, I have to go out to the daily. Back on the daily. Again, remember I did the top-down analysis. I'm back on the daily. If we just zoom out, we got all these highs left behind in the market. We got this old high right here. And then we got the all-time high right there, which is, no, that's not the all-time high, but that's the next level right there. So once we break out, take out these equal highs right here, I'm going to be looking at. So essentially, this is what I'm saying. Once we break out and clean out that 258 level right here and this high right here, we are pretty much clear in the clear for coming up and testing, taking out 299, 321 in the all-time high, which is 339. So do we do that? That's why I was asking y'all in the beginning, do we do that to close the second quarter, or do y'all see us doing that third, fourth quarter of 2025? But right now, we're right here. We just, all we can focus is right now. So let me go back down to the hourly. I just had to give y'all that perspective. Go back down intraday. Throw back up my dividers, my weekly dividers. Next thing, okay, we got our weekly bias. We understand what price is doing. Next thing I want to do, we got our higher time frame PD arrays. So these green highlighted areas, these are daily fair value gaps. So if price wanted to retrace back down to these levels, it can do so. But now we need to get closer to price. Now we need to go down intraday. So when I'm on the hourly, we call this intra-week. The hourly time frame is intra-week because I'm looking at the previous week's price actions. But now I want to look at previous day's price action. So we need to drop down to a 15-minute time frame right here. When I'm on the 15-minute time frame, I'm looking at the previous day's price. Previous day's price. So what I need to do is I need to drag this over. These are my daily dividers. So these go from midnight to midnight. And we're going to get to price action right now. We're going to look at what's going on currently for XRP. One second. Let me drag that out. Right there. Law docs, if there is a currency reset, it may get crazy. Here we go, law docs. Here we go. A lot of talk of revalue for dinar. Okay, law docs. Now, when we talking about right now, law docs, currency reset. We can't control that, law docs. We can't control that. We can't foresee that neither. We can't even foresee that. We don't know what they want to do. They could tell us one thing and do something else. So what I'm doing right now is I'm looking at the previous day's highs and lows. So right here, this is Saturday's high. That's also the previous week's high. We already dropped down on Sunday and took out Saturday's low. So what did we do? So right now, today, Sunday, so far, what is the market? What market profile are we currently in on Sunday, which is between this vertical trend line and this vertical trend line right here? What's the market profile? Y'all tell me in the chat. So far, we already dropped down and took out the low from Saturday, and we didn't come down and take out the low from last Friday. Y'all are correct. Consolidation. So y'all know we are in a consolidation on Sunday. So like I told you earlier, Lenny, that's why I said not much happens on Sunday. And I think a few ZZ as well. I have low expectations on Sundays because most of the volatility doesn't come in until Monday, Tuesday, Wednesday of the week. It's not random. It's not random at all. So that low right there is the low from Friday. And if I keep zooming out, if we come down lower, there goes that daily fair value gap. And then we got the low from Thursday of last week. So I'm gonna go ahead and highlight that. Do we come down there? We could potentially can, but I'm very bullish right now on price. Arthur, right on, boss. Too many people speculate. That's what I'm saying. I don't speculate, man. This is like, if I'm showing y'all what I'm showing y'all right now, I don't have time to be speculating when I'm showing you right now opportunity. So what I'm showing you right now, y'all might thought, oh, well, I don't want to pay attention to that. I'm a long-term investor. I'm not really into intraday, day trading. No, that's why I'm talking about the futures contracts as well. So these futures contracts are going live. And what I'm showing you right now applies to the futures contracts. So it is currently Asia. It's currently Asia session on a Sunday. My expectations are low. So let's go ahead and outline Asia. Asia session begins at 8 o'clock p.m. 8 o'clock p.m. Eastern Standard Time to 12 o'clock midnight. I'm going to label it Asia. One second, y'all. 1 second. Asia. Sometimes I get I go brain dead. Sometimes too much on my mind. Right there, middle line. I'll try to remove that right there. So we're in the Asia session. Asia. So I just drew this rectangle that's outlining the current time period, the kill zone that we're in. Yeah, I'm definitely a true trader. I don't speculate, man. You could consider this speculating, but again, we looking for opportunities right now. Go just check out my videos on my channel. Keep in mind, boss, we hit that 163 fair value gap a month ago, last Sunday night, early, Monday morning at 3 a.m. on the Asia session. Lenny, I ain't got to keep that in mind. I'm past that. Lenny, we past that. This might be, you might be analyzing it, but we passed that. We right now, today, what today is, May 11th. What are we going to do this week? I'm already outlining what we did a month ago. Sometimes it could be significant if you're looking at inefficiencies and PD arrays. But right now, I'm showing you. My bad, Lenny. Yeah, ZZ. My bad. ZZ. My bad. What I'm showing you right now is we already determined our weekly bias. There goes my target right there above price. There goes my target right there above price. So I'm aiming sometime this week for us to come up and take out at least minimum previous week's high right there. We're not far from the previous week's high. Y'all already identified that price on Sunday is consolidating. Okay, we're consolidating and it's high resistance. So right now during the Asia session, we're retracing down into a, what is this right here? Y'all tell me in the chat. What is that right there? Retracing down into that what? That is a 15-minute what? There y'all go. 15-minute BISI, buy side imbalance, sell side inefficiency. We're trading down into that currently. Let's see what we want to do. If we lose that, if we want to trade through that, we're not going to ignore that that's a gap. We got one just right below it, right here. BISI. So there goes another BISI right there just below it. Now what I need to do is I need to zoom out to the hourly to see what the hourly is doing. Let me go back out to the hourly. And I'm looking for some type of inefficiency on the hourly. Currently, I don't see one. Very high resistance. We traded up into, on the hourly time frame, right here. Right here. What is that right there? Y'all tell me in the chat. What is that right there? Now, this is all, you know, some people might consider this noise. This is high resistance, liquidity conditions, meaning choppiness, volatility, but you can still study this price action and there are still micro opportunities going on in price. It's a SIBI, sell side imbalance. So the blue shaded area, that's a SIBI. Why did you mark the wick in that last BISI? I didn't mark the wick. What are you talking about? I didn't mark the wick. I know you might be talking about this one right here, but remember, I dropped out to the hourly. This is a 15-minute wick. So it's not ironic that that 15-minute fair value gap is inside of that hourly wick right there. So I had to zoom out. I zoomed out, Arthur. Let me show you. Go back down to the 15-minute. There it is right there. That's what you're talking about, that fair value gap. This is a 15-minute time frame. But then I zoomed out to the hourly because I said I needed to see what the hourly is doing. That's me understanding. Yeah, change time frames. That's me understanding what is the higher time frame doing. Why did we just randomly break down? Well, initially I didn't see it at first. See this highlighted area, this SIBI? I went from a hourly down to a 15-minute. And then I said, okay, I outlined the Asia session. I said, what are we doing right now during Asia? And the first thing that came to my eye was the BISI, 15-minute fair value gap right there. Two of them. Okay. And I'm like, okay, why did it just sell off like that? It's not random that it just sold off like that. No. I had to zoom out to see, okay, what kind of PD arrays are out there? What kind of inefficiencies are out there? And boom, that's the first one that I highlight. So that's a premium array. When price was down here, after dropping down to this daily fair value gap right here, that was a discount. Price started seeking premiums. Again, even on the hourly time frame. Do y'all think it's random? So I forgot who asked me earlier. But again, you could do this for every hour. Every hourly candle, you can outline a directional bias. So we dropped down the discount. Remember, discount the premium, premium the discount. And then we started moving higher. We took out what? This high, traded up inside of this wick, close, opened up, traded down into this what? Order block. Again, like it get real surgical over here. Order block, which is the opening price of this down close candle. For y'all in the Patreon, there goes that swing low pattern, that 3-candle pattern that I taught y'all in the Patreon. Swing low, order block. We open up right here, trade down, initiate the order block, trade higher, take out this high right here. which is buy side liquidity. After we took out that high, we trade a little bit higher. It's not random that we took out that high and started breaking down. No, we went up into what? This ghost pool right there. You see that? You think it's random that we trade up into that 0.75 level, that 0.50 level? And this is more advanced for y'all who don't understand. Even y'all in the Patreon. This is more advanced. This is walking through every candle. Imagine going through every candle. Some of y'all haven't sat through an entire day of price action watching every candlestick. If you haven't done that before, then that's a certain type of training that you must go through if you want to learn it at this level. You have to train your eyes to see certain things. So after we went up into that ghost pool, we traded back down into order block. Not only we traded down into that order block, what is this? This is a discount ghost pool. So let me outline that. Right there. Trade down into that discount ghost pool, back into the order block, which is more confluence. And then we displace higher and traded up into this SIBI. And then we use that SIBI as a premium. Now, in this type of market condition, this is scalping only. This is like in and out. Like this isn't nothing where you trying to buy and hold or even day trade. This is scalping. I would not be trying to. And first of all, this isn't the best conditions because it's a Sunday. It's just Sunday. So these aren't the best conditions in the market. Price was literally just at 240. Now it's back down to 236. Now, if we're following the derivatives, the XRP futures contract, every tick will be 5 cents. I mean, $5. Every tick, what is it? Every 5 ticks is $25. So let me go pull that up for right quick. Let me go pull that up. CME. So this right here, again, May 19th, CME goes live. And if I just scroll down, again, if y'all didn't see it, XRP futures coming May 19th, which is next week. And then we go to minimum price fluctuation. And when I said this is scalping, this is a scalper's environment. If we look at right here, every 5 ticks, or you might consider that drops, but I'm gonna say ticks. Every 5 ticks per XRP equals $25 per contract. Y'all put that in perspective. So the price of XRP was just at 240. Now it's back down to 236. And that small little fluctuation in price, y'all calculated. Y'all are better mathematicians than I am. Y'all calculate how much that would have been, because every 5 tick is $25. So that is pushing these digit. This is pushing the digit to the left of the decimal. So from 240 back down to 236. Y'all calculate that if y'all are for the mathematicians out there. $25 every 5 tick. So let's come back to the XRP. No, it's not 12 cents. It's not 12. Oh, well, you're saying that's a 12-cent move. But okay, every 5 ticks is $25. So I can't zoom in on this chart at the price. But if you look over here to the right, where I got my cursor, that last decimal is 1 tick. That last decimal that's moving, that's 1 tick. So for every 5 ticks, that's $25. 240 times 5.5, $2,000. Barton, you did the math, $2,000. So imagine that from 240. Now let's go look at the trade. Let's go look see if we can find an example of that. And this is called back testing. So from the 15-minute time frame, let's see if we can find a short. Y'all think it's random that we traded down to that right there? Also, let me look at the previous sessions. I didn't get done filling this out. Let me go look at the previous session, what we did earlier today. Let's go back to the PM session. We already took that out. Let's go out to the 130. So this low right here, this swing low right here, This low was from the New York PM session, which goes from 1:30 to 4 o'clock PM. That low, I'm gonna outline that. That was a draw on liquidity. It's not random that price went directly there. If you're in the Patreon, you should know the kill zones. But we traded down, took out that low right there. That was the New York PM session. We're currently in Asia. So we dropped down. Now let's see from premium, which is the hourly fair value gap, down to discount, which is this liquidity pool right here. Also, we're trading off that order block right there. Said, sorry, part of my screen was cut out. Let's go see if we can find a trade opportunity or an example of a trade opportunity during this sell-off just now. So we traded up to premium, which is the blue highlighted area. That's an hourly SIBI. And then we use that as a resistance level. So here goes a pattern right here that helps me know when the market is going to reverse. We create a swing high, a swing low, a higher high, and we break down. That breakdown right there is telling me that price wants to break down. We start taking out all these lows over here. So that price is definitely bearish. And then y'all tell me in the comments, what is this right here? This is the first opportunity I see in this sell-off. This is the first opportunity I see in this sell-off. What is that right there? Y'all tell me in the chat. SIBI. So this is a 1 minute time frame. SIBI. It's a sell side imbalance, buy side inefficiency. I'm gonna highlight it white. So let's hypothetically say that was the opportunity that we seen. This happened during the 9 o'clock hour. It is currently 9:40. So again, it happened in the 9 o'clock hour in the second quarter of the 9 o'clock hour. So from 9:15 to 9:30, there was an opportunity right here. And that's more advanced for y'all who didn't catch what I just said. But this is a SIBI. For the people like Lenny, I believe you said you didn't know where to enter at. So we're going to enter entry. You want to find, if you're day trading, you want to look for entries from there's a sequence, 5, 4, 3, 2, 1 minute time frames. Those are your execution time frames. 5 minute, 4 minute, 3, 2, 1. I typically go from a 5 down to a 1 minute. But you can use either the 5, the 4, the 3 to 2 to the 1 time frame to look for entries. So right here is a shorting opportunity. I'm gonna show you where to enter. Again, there goes the SIBI. You can either enter at the bottom, the low of the SIBI, which that will offer you a guaranteed fill, the low of the SIBI, right there. The midway point or the high. So you wonder why I say the low of the SIBI is a guarantee, because you're going to get a guaranteed fill if you see this opportunity. Price creates the SIBI, it trades back up into it, it pokes through it 1, 2, and it's in a hurry to get lower. It doesn't want to come back up and test the midway point or the high. So that's if you want a more premium opportunity with little to no drawdown, meaning little to no risk. So if you enter at the midway point, you're reducing the risk of the trade. If you enter at the bottom, you got more risk on the trade. If you enter at the high, you're reducing the risk of the trade. So for example, our stop loss would be, let me show you, right here at the top of that gap right there. Well, the candle that forms the gap, your stop loss would be at the top of that wick. See that? Stop loss right there. So our objective would be down here during that sell side liquidity of the New York PM session. So that's where we're going to take profit at. So I'm going to take this tool right here on TradingView. It's a shorting tool, and they got one that's called long. So we're going to measure our risk right there. On this particular trade, we're risking 0.15%. That's little to no risk at all. And for a reward of down to this low, a reward of 1.49%. But now that we have futures products available to us, we can now calculate how much this will be in XRP with the derivative. So let's come back over here. First, I need to measure. Let me see. Let me see right quick. So the entry, y'all do the math. The entry point, y'all draw this down too. Draw this down. We entered at $2.38 and 95 drops. So 238.95. That's our entry point. Y'all get y'all calculators out. Before we do that, I want to give y'all the numbers again for the XRP futures contract that the CME was delivering on May 19th. So remember, we're going to go over this one more time. Y'all get y'all math together because I don't have my calculator on me while I'm doing the live stream. For every 5-point ticks, which that's all the way the fourth. Okay, we got the middle of we got the decimal point. Everything to the right of it is what we're calculating. The last tick is what we're calculating. So every 5 ticks in the price of XRP is $25 freaking dollars. I don't think y'all understand that yet. Every 5 ticks is $25. Or if it makes it simpler for y'all, every 1 tick is $5 per contract. So you already, every time this tick right here, this 1 turns into a 2, it's $10. When it goes to a 3, $15. When it goes to a 4, $20. When it goes to a 5, $25. And that's what that represents up here. And then again, get y'all calculators out. So for every tick, that's $5. For every 5 ticks, that's $25. So now let's come back over here to the chart. And we entered at $2.38.95. $2.38.95. Okay, that's our entry point. Our take profit was $2.3540. $2.3540. So if we know every 5, and we're shorting the market as well. So if you notice, we're going from $2.38 to $2.35. Every 5 ticks, or every tick is $5. Every 5 ticks is $25. We are shorting, we are selling, not buying, we're selling. I'm just walking you through. Why did price just sell off just now? And I'm trying to crunch the numbers. Let me get my calculator. No, it's not 1/100 of a cent. Again, this is the derivatives market. That's why the derivatives market is so valuable, because you're pretty much amplifying everything. Barton, you said 1,000, 1,775. Let me see. I'm trying to figure out how to calculate this myself. Again, I could trade, but I'm not the best at math. I'm good at math. I'm real good at math, but this is new to me, as far as like crypto and derivatives and futures contracts with XRP. 238.95 minus 235.40. So y'all write this down. You profited, how many ticks did you profit? So it's 0.0355. Y'all got, okay. 0.0355. You saying that's 71 ticks? I got, after I subtracted 238.95 to 235.40, and I got 0.0355. So essentially 355 ticks. Yeah, I got 355 ticks. I got 355 ticks. So every tick, remember, every tick is $5. So let me see, what would it be? Would it be 355 times 5? 355 times 5. Let's calculate that. And y'all are correct. $1,775. Okay, shout out to you, Barton. You on point, Barton. This trade right here that just happened live, we watched it live on live stream, and I'm showing you once the derivatives contracts go live May 19th, y'all could be sitting here instead of, y'all, some of y'all are waiting for y'all portfolios to go up $1,775. Some of y'all are waiting for y'all portfolios to go up. But if you know this skill set, which sign up in the link below, sign up to the Patreon so you can learn the skill during the Asia session. This didn't happen randomly. So how about on a Sunday? And remember, if we zoom out to the hourly time frame, we already know the market is high resistance. It's just chopping around, consolidating. You can use the info line in TradingView. It shows your tick. Okay, Lenny. See, again, Lenny, shout out to you, Lenny. Shout out to you because I don't know everything. Where's the info line at? Where's the info line at? Matter of fact, you might need to send it to me and I will refer to it more often. Or I might know where it's at. I'm not sure, but it says the ticks. Let me see. Go back down to the 1 minute. 1 minute. Right here. Okay, I see it right there. 355. There you go right there. 355. Law Docs, you say no, every 5 ticks is $25. We calculated it. Every tick is $5. So we just took 355 times 5. You can calculate it every 5 ticks, but we simplified it by doing that 355 times 5 because every tick, again, come back over here and look, Law Docs. There's 2 ways you can calculate this. Every 5 ticks is $25, or you can look at every tick is worth $5. So that's another way you can look at it. So we just took the simple way. Every tick, $5. What you mean, which are we trading? You got to catch up. You got to follow along, Law Docs. You got to follow along. We got a consensus in here. Everybody's on the same page. But, okay, what I was about to say. Yes, that's $1,775. $1,775 on a Sunday. So again, some of y'all got to get ready to go for work. But if you learn this skill set, and then also for y'all that have been here, what is this over here to the left? What kind of profile is that right there? What profile is that over here to the left? Once we went up into that premium array, which is that hourly SIBI, we reversed and went back down to a what? Y'all think that's random or does that repeat over? How many times have I showed y'all that in the charts? Over and over again. Market maker on the left side is a market maker buy model. We traded up. Again, you can look for buying opportunities going higher into the higher time frame, 1 hour SIBI. Once we went up there, smart money took profits and then they offload their longs to short the market back down to a discount. And you can be looking for shorting opportunities inside of this price leg shorter, which is a market maker sell model. This was low resistance because look how quickly it dropped down there. It did it with little to no resistance, no choppiness. Price was clean. This is the type of price action you want to see, whether going higher or lower. This over here can be traded high resistance, but you have to endure more deep retracements, consolidations, choppiness, and time. They both are tradable, but being able to identify low resistance, high resistance is key. This is a key little part of the video too, more advanced. So on this shorting opportunity right here, if we was to short XRP from the CME, goes live May 19th, that would have netted us $1,775 on a Sunday in a market condition. And again, this is more advanced. I know some of y'all told y'all that Sundays are irrelevant. And I tell y'all that because you need more experience before you can understand, okay, I see opportunity. Because if you don't know what's going on those higher time frames, you will get lost and chopped out on these lower time frames. Yes, in a matter of minutes. Okay, I'm glad you mentioned that, Law Docs. Let's see how long this trade lasted. So I'm going to take a ruler from entry of the SIBI. down to take profit. Let me correct this right quick. 1 second. From entry down to take profit. That trade lasted 14 minutes. That sell-off that we just witnessed, and a lot of y'all might think, oh, it's just price volatility. Man, bro, y'all better stop listening to retail. A lot of y'all might think that's volatility, but you know who's going to be in here? I'm going to be in here trading this. And guess who else is going to be in there? Institutions. And while people complain about price, institutions with big, large capital in the derivatives market, futures markets, they're going to be putting behind millions, hundreds of thousands behind each one of these trades. And they're using algorithmic robots and shit like that to constantly go turn a profit. And they're not too much concerned about whether the price goes higher or lower. They're in there making money constantly, nonstop. That's the beauty of the futures market. That is the financial markets right there. That's the game. It ain't long-term holding shit. No, they're putting their money to work right now. That's the difference between long-term investing and right now day trading. Yes, Daryl, you say you're pretty much good for the week after that. Yeah, imagine starting on a Sunday. You know, you haven't even started your work week yet. And on a Sunday, you know, you went ahead and banked you a little under $2,000. So to be honest, you don't have to do nothing else for the rest of the week as far as trading wise. You could just go ahead and wait till next week and you get you one of those once or twice a week and then let it compound. You're using risk management as well. A lot of people ain't gonna talk about risk management. Every one of these trades, again, you're either gonna take 1 or 2 trades per day. And then when you get real good, you can reduce that down to like 4 trades per week. So even dropping out after that, look how we're currently trading. We went down to discount. Remember this trend line right here. This is that order block that I showed y'all on the hourly time frame. Now we're seeing displacement higher. And then look, whenever those future contracts go live for the CME, I will be able to go in there and paper trade it. And we can see live examples once that happens. But drop down a discount, displacement higher, retracement. Now we're cutting through those, I forgot what time frame, 15-minute fair value gaps. And those are inversions. So there goes another trade opportunity right there. Entry. Now we're bullish. So that's that back and forth trading I'll be trying to tell y'all about. We can be shorting, buying, both directions. It don't matter. Institutions, it don't matter to institutions. So imagine buying that back and now we're moving back higher like we are right now. So you just netted 1,700 and now look at price now. Now let's look at a long entry. Let's look at a long entry. So from entry right here, our risk right there. Take profit. You could take profit right here at the top of this fair value gap. That is 100. Y'all do the math. That will be a profit of 108 ticks. Again, every tick is $5. Do 108 ticks right there when it comes back up to this 15-minute top of that 15-minute fair value gap. So 108 ticks. Y'all tell me in the chat, what is that? Retracing down into this BISI. So there you go, $540. Okay, so you just netted $1,775. Now add $540. Go ahead and add that $540 on top of that. This is the type of stuff we talking about, running it up. You know what I'm saying? What we waiting on? If you learn this skill set, what you gonna be waiting on? What y'all gonna be waiting on as far as y'all not gonna care about what XRP is gonna do in the next month or two, because you're feeding your dopamine by printing money. And we're doing it at a specific time of day, which is the Asia session. We're inside of the Asia session. Also, we're inside of a macro too. So it is 9:58. 9:58. We're in the 9 o'clock hour, about to go into the 10 o'clock hour. So let me drop this vertical trend line right here. 10 o'clock. Got a lot going on my chart, but y'all might want to go back and rewatch this one because, again, giving y'all dropping dimes for y'all. So what do we do in the 9 o'clock hour? In the 9 o'clock hour, right here between these two white vertical trend lines. We traded up into that premium array and we sold off. I showed y'all that shorting opportunity. Drop down the discount, leaving a discount. Now we're beginning going back up to a premium. We're in the macro. So from 950, 1010, that's the macro. And this is what we're looking at. Right now, you said, what are the trading hours? The trading hours right now are the traditional hours right now. We already know that Coinbase, with their derivatives products, they're about to try to go 24 hours, 24/7. But all the CME products aren't 24/7, they're traditional hours. But it doesn't really, well, it's going to be beautiful when it is 24/7. But right now, I'm just going to operate traditionally. The traditional, here goes the hours right here. It's really Monday through Friday, but it opens up, markets open up on Sunday, like in the evening, 6, 7 o'clock in the evening, which we don't count Sundays. And then it closes Friday, 4 o'clock p.m. And I got a theory, which this is one of the big announcements that I think Ripple has not announced, because I feel like they got that secret partnership with the CME, and that is the derivatives market. So Ripple, the company, they have to have a partnership with the CME, which handles majority of the derivatives products. So, and the CME, they're still behind, they're outdated. They don't have like, there's not 24/7 trading on these trades. It takes time to settle these trades. So all this money flowing through the CME, they handle quadrillions of dollars. They handle over one quadrillion in capital when it comes to transactions. So we got large institutions in here trading. We got retail in here trading. We got all this institutional money, big money flowing into these markets. And at the end of the day, it takes a long time to settle these products because of Swift, because of settlement. So what happens when CME starts working directly with Ripple to help them speed up these transactions for these trades? And that's why I say that's another. And then if you look at how when they announced this, Brad Garlinghouse went straight to X and talked about it. So that tells me they have some type of partnership going on, and that's one of the big ones. Ripple working directly with the CME group, and that's huge. So y'all be on the lookout for that. It all goes hand in hand. This trading stuff and Ripple and the XRP, the tokens. Look, if I'm not even worried, if once this go live and I'm successfully trading these products, I'm not even gonna be worried about the underlying asset, the commodity. I'm just gonna put it up and I'm gonna be showing you, boom, just like that. Boom, take profit. Just like that. Y'all see that? There it is right there. Forecasting before it happens. How did I know it's just gonna go up there? Oh, is it random that we trade down into this fair value gap right here and use it multiple times? And then boom, displays higher. You said XDC does settlement on some of the foreign exchanges already. I hear you. I hear you, Lenny. I hear you. We also need to see with XDC. We also need to see some type of derivatives products for XDC as well, because y'all already know institutional capital comes from the derivatives market. Hope y'all understand that. I know XDC got utility, but I need to see some type of derivatives products for XDC. So hopefully y'all understand it, man. Y'all let me know in the chat. Do y'all like that type of concept? Do y'all like these concepts? Do y'all understand price action a little bit better? Do y'all understand what I'm outlining? Trying to get y'all to understand trading. Let me see right quick. Let me zoom out to the hourly. And even on the hourly, price is just chopping back and forth. High resistance. He said, this is awesome. Shout out to you. Shout out to you, Mark. But yeah, man, be looking out for this. We're going to be looking into this more and more as the days get closer to this going live. And as the months and the weeks go by, we're going to be looking at how to trade XRP futures. And we're putting actual price. So I remember when I first started doing my channel, I was just going off of percentages. We didn't have the specs, the specifications of contracts. So I was just using percentages moves. But now we got the actual figures and the actual pricing for the contracts, and now we can put the real money behind it. So 1775 on the first trade, 540 on the next trade. You said your brain feel like it need a nap. Hey, this trading. It's trading. So briefly, let me go ahead and review the rest of the market because I'm gonna let y'all get up out of here. I know it's getting late for some of y'all. We got XLM trading at 31 cents. Again, I'm not gonna give y'all in-depth price action like I just did with XRP. Y'all go back and watch that one. I think that one was key, this live stream. But we traded down to this fair value gap, 3-month fair value gap. And now we're currently moving higher for XLM, 31 cents. XDC, quiet, not knocking XDC, but just quiet. I would like to see derivatives, futures products eventually come. I would like to see XDC come to the United States, something. But we're currently trading at 7 cents. We dropped down to this 3-month fair value gap. We just traded down to this monthly fair value gap. And now XDC is holding inside of a range. We're holding inside of this price range right here. So we have not taken out previous month's high yet. So we got 19 days to see how we close this candle. Still bullish on XDC though. Still bullish. HBAR traded down to discount, currently trading at 20 cents. We traded back inside of this inversion gap. So this inversion fair value gap, we traded back inside of that. We took out previous month's high. And now we're just ranging inside of the gap. So I'm bullish on HBAR as well. I accumulated a whole lot down there at 12 cents recently, last month. And now, once HBAR starts moving, it is very volatile and very violent. So that's HBAR. Let's look at Bitcoin. Bitcoin, here we go. Hey, y'all pay attention because I already told y'all yesterday. I told y'all last week. Just go back and watch the live stream. Bitcoin about to break its all-time high. It's on its way. It's on its way, and it possibly could do it in the month of May. We got 3 more weeks in May. So May for Bitcoin, it's already reaching for that all-time high right there. We're currently trading inside of this ghost pool right here. So pay attention to that. I'm sure we at a specific level. So I'm going to take this Fibonacci right there. Boom. Look at the precision. Look where the bodies of the candles are. Well, look at the body of the candle. Do you think it's random that Bitcoin is just trading right here at that 0.75 level? Look at that, right on top of it. You think that's random, or is that algorithmic? And these things repeat over and over again? I don't think so. Look at that. It's just holding right there at that level. That's not random at all. Pure algorithmic. And then there goes the all-time high right there. Not far from it. Let me drop down to the weekly for Bitcoin. And once everybody start hype training Bitcoin again, I told y'all first. Remember that. Remember that. Like how we're trading right now on top of that 0.75 level inside of that ghost pool. Right there on top of it. So far, we already took out last week's high for Bitcoin. We already traded up today and took out last week's high. So that's interesting. Early in the week, already bullish on Bitcoin. I'm already anticipating it to just go ahead and break out and Bitcoin start reaching all new time highs. So 109,396 is the previous all-time high. So that's Bitcoin. I'm bullish on the week for Bitcoin. And that's gonna be it, man. I appreciate y'all joining. Y'all make sure y'all come over and sign up to the Patreon if y'all want to get this in-depth lessons and this price action and want to be a part of the community and chat with me on the daily. So y'all sign up to the Patreon if y'all want to join. I definitely appreciate y'all joining on this Sunday. We got a bullish week coming up. Remember that narrative. When y'all go later in the week, when the XRP cross your mind, remember what I told y'all. We're reaching for last week's highs. So we're bullish on the week. Let's expect price to reach up and go higher. But with that being said, I appreciate y'all joining. I'll check y'all on the next one. Y'all stay easy. Peace out.